I want to get right into the broader markets ahead of this week's Fed meeting. Joining us right now is Jeremy Siegel, professor emeritus of finance at the University of Pennsylvania's Wharton School of Business. Also, of course, chief economist at WisdomTree. Good morning to you. What do you think we are going to hear from the Fed this week? And what do you think we should hear from them?
I think we're going to hear what I call a hawkish cut. I think they are cutting 25 basis points. I think there's going to be dissents on both sides. I think Mirren is going to go again for 50, but I think there could be two, maybe even three that want to keep it unchanged. So I think this would be, if that would be the case, the most dissents under the entire Powell nearly 8 years that he has been chairman. Of course, as we note, in a few minutes, you're going to have Kevin Hassett. I think in the 70s now as the probability of the next Fed chair, which Trump says he will announce at the beginning of the new year. So I feel I'm sort of a straw man here for maybe what Kevin is going to say. But he won't spill the beans. He won't tell you that he's the man or not. But he certainly has gained in prominence. And what he says is going to start moving the market much more than in the past.
Do you believe ultimately that there's already a shadow Fed, even without maybe in name only, or without even having a name, that we just know that come this May, interest rates are going lower?
Yeah, I mean, well, you have Mirren already there. And actually, I've been relatively impressed with him. He's put out some good papers. I don't agree with everything on him. I actually wish he would stay maybe after January. Maybe he will instead of going back. I think I think the Fed needs a lot of different voices, and he's certainly one of them. So already he is in the Fed. And yeah, I mean, the announcement of a new Fed official, if it is in January, I think would be perhaps, one of the earliest before the actual change takes place. So, how important will Jay Powell's statements be after that? It's going to be a new Fed. If it is Hassett, it's really going to be a new Fed from what we've had in the past.
What do you think the bond market is going to do if interest rates come down? I mean, this is the one interesting component of it. I know we spent a lot of time talking about equities, but I've been curious about how the bond market has reacted.
You know what? I don't think the bond market is going to move that much down. I mean, my feeling is, and I've stated this for many months, Fed funds rate, if you go back through the last 75 years, has been about 100 basis points below the 10-year. So the 10-year is what, 415 now, approximately. So that would be the low threes. It would not necessarily lower that long rate. Now, what does that mean? That means 30-year mortgages are not going to go down very much. But to say that that's not going to have any effect on the economy is wrong, because there's over $15 trillion worth of loans that are tied to the Fed funds rate. All the short-term borrowing, auto loans, inventory loans, the prime rate, credit card rates, all those short-term rates are one-to-one linked to what the Fed is going to do. So even though it might not affect the long rate, which is important for mortgages to be sure, it definitely will stimulate the economy for the short end.
So, Jeremy, the bond market is dealing with a lot. Maybe we're cutting into a 3% inflation rate, and maybe, I guess, critics of Kevin Hassett would say that he's not independent enough, or more likely to be more dovish than the market really calls for. But do you expect those things to come home to roost?
I think
or because that hasn't really happened yet, do you think the vigilantes will this raise the ire of people that watch it close? I mean, we're at $38 trillion in debt.
Yeah,
there's a lot of reasons.
That's for sure. But, when the hints came that Kevin was the front runner, we did not see the long-term bond rate go up. I think the long-term bond rate is going up now because of what is going on. Two factors. I think one is going on in Japan. certainly. I mean, they're, I think, at a 20 or 30-year new high on their rate, and that's important. And secondly, the fact that the economy is holding out well. You know, the fear that this quarter might be the quarter where those tariffs were going to bite the economy, at least from the early news that we're getting. We're not getting any really significant dampening of sales, so that has been positive. So I don't think it's Kevin. I worked with Kevin. Kevin called me in 2000, said, Jeremy, you want to work on the John McCain campaign? He was the lead economic advisor, and I was second. He's a wonderful person, a wonderful economist. I don't think the market should have anything to worry about him.